Welcome everyone to another episode weekly Market Hunter Thursday with Hervé. I'm real excited today to bring on Spencer Gray of Gray Capital. Let's go ahead and get started. Spencer, welcome to the show, my man. Thanks very much for being on with us today.
Hey, Hervé, really appreciate you having me.
There's a lot of markets to choose from. What do you find specifically appealing about Indianapolis for multifamily?
What's kind of great about Indianapolis that's been happening over the past several decades that really was able to insulate Indianapolis in many ways during 2020 is that we're a very economically diverse city. We are very business friendly. And the entire state of Indiana is a very business friendly environment to be in. And then Indianapolis is very affordable. And so, a combination of a lot of those three factors have led to, very steady population and job growth. It's been very well insulated from some of the job declines. I mean, Indianapolis is number 2 in the nation for the least amount of job declines in any major metro in the U.S. I think Salt Lake City was number 1. It's very affordable. And so a lot of companies, including Salesforce, Infosys, a lot of kind of West Coast tech companies are, making a hub in Indianapolis because it's incredibly affordable to live. Has a great just standard of living, and just some of our suburbs just continually getting ranked as some of the top few places to live in the entire United States.
That's awesome.
We have a lot of interstate migration, a lot of just smaller towns that have, just lost, whatever those economic drivers might be. A lot of those folks are moving to Indianapolis, where there are a lot of economic drivers that are still going. It's growing. There's a lot of jobs being available. We're also getting migration from cities like Chicago and states like Illinois, which are, it's only about a 3-hour drive just north of US 65. And Illinois and Chicago specifically, very high tax state. There are some issues for the Illinois government, and that has made Indiana just a very attractive place for some of those folks to move. And then additionally, some folks from the West Coast who again are looking for just a low cost of living state. Maybe they're going to work remotely. Maybe they're going to work for a Salesforce or some of the other tech companies that are coming here. So it's a little bit of both, but certainly from kind of the Chicagoland area migrating in. And then a lot of the smaller towns that aren't growing in the state are moving to Indianapolis and some of the other few municipalities that are growing.
Where is that affecting demand? Is that affecting demand for more, let's say, single family homes? Is it affecting demand for apartment rentals, or perhaps even both?
It's really both. And so, prior to the pandemic, we were seeing a ton of growth in the downtown area. Again, that Salesforce has a major presence. A lot of other large companies have a major presence. You mentioned them, Eli Lilly, Rolls-Royce, Roche Diagnostics out in the suburbs. So a lot of growth in the downtown. Now, obviously, COVID, there has been an exodus from downtown, which we've seen kind of across every major metro.
Absolutely.
But so we've seen a huge growth in the demand for single family homes, but also a huge amount of growth for apartments, especially in the suburbs and just pretty much any area that's not in the core downtown CBD, which we don't have a huge downtown central business district. So it didn't have nearly as large of an effect as some cities that may have, a very large downtown. But our suburbs, they were, growing at a very fast pace prior to COVID. And, they continue to grow throughout COVID. I mean, Indianapolis, we were the top number 1 rent growth for the large market in the entire United States. We ended up in 2020 with about 4% annual year-over-year rent growth, where almost all other major metros saw declining rent growth last year. So a lot of that was in the suburbs, a lot of new deliveries, but we saw a lot of absorption of new supply also taking place in those suburbs. So certainly the suburbs are kind of where that peak demand is for single family homes and multifamily.
That move from downtown, do you believe that move is temporary, or do you believe it's secular? Do you think downtown is going to be ghost town for a considerable period of time, or that if, and as COVID starts to subside, and hopefully fully get rid of, do you see folks moving back in because folks continue to be attracted to Indianapolis? And then secondly, what kind of an impact has that had on rental prices in the suburbs for a lot of the activity that was taking place before the pandemic hit? And then, of course, what's been going on since then?
The reemerging of the downtown, the urban core, I think that's still a big question. I'm a firm believer that the downtowns are going to come back. It's just a matter of when. I think it's going to take some time, but without a doubt, once people are becoming more comfortable going back to work, they're going to want to have that proximity to their place of employment, even if they're able to work from home. I think they're going to want to be in areas where there are restaurants, bars, things to do, entertainment, and certainly the downtown. I mean, that's where that hub is. That being said, a lot of the suburbs, they have been growing way before the pandemic, where there are a lot more amenities, entertainment, restaurants. There's been a lot of growth in our suburbs. There are now almost these little small satellite cities just out of the kind of the core Marion County where Indianapolis is in, and that has certainly seen rents increase significantly in a lot of those suburbs, partially due to a lot of new supply coming online, especially on the northern suburbs, which would include Carmel, Fishers, Noblesville, and Westfield. Those are kind of the largest, the fastest growing suburbs on the north side of Indianapolis.
Wow.
They've seen a lot of new supply over the past few years.
Is it safe to say a lot of the supply that has been coming on the market has been type A supply? If the answer to that question is yes, what kind of that impact has that had on type B, even type C value add plays?
I mean, we see opportunity kind of throughout the income demographic spectrum in a market like Indianapolis. Certainly, I mean, the occupancy rates and rent growth for the kind of the C and B class multifamily assets, I mean, it's been very strong. But there's also been a considerable amount of rent growth in that A class product type in the past few years as well. And a lot of that is just new deliveries come online, and naturally the rents are going to be higher. Just to your point, they're looking for the returns, and cost of build has been going up, and they have to build kind of that higher rent level to justify the cost of construction. So we're seeing kind of rents move up kind of throughout the spectrum. That being said, Indianapolis is still very affordable. I mean, we bought an apartment community on the east side of Indianapolis last year, where we still had studios renting for a little bit over $400 a month, and one bedrooms around $500 a month. So there are still some affordable options out there. Now those were significantly below market, about $150 to $200 below market, but we're still relatively affordable compared to even peers in the Midwest, and especially compared to the gateway primary markets and even some other markets in the Southeast.
How did you get started in the biz, and what made you choose the path that you are on right now?
My real entry point into multifamily was by developing a relationship with an existing multifamily operator here in Indianapolis who's syndicating projects. Was able to develop a relationship and come onto their projects as a co-general partner. So really learning from kind of being that kind of active passive role where I was active in kind of the business plan, the asset management, but not involved in all the day-to-day operations. But deploying my own capital, raising some capital from friends and family, but really kind of learning on the inside of their operation until I could kind of scale out our own systems, start hiring staff and doing a lot of our own projects. I've also just invested as a limited partner, totally passive investor in some projects as well. I've gotten a lot of experience with different operators to see how they work that way. Now we're pretty much focused on our own projects because we are at a scale that it makes sense, and it's the best use of our time and our capital. But yeah, so I kind of started partnering with somebody else and just kind of kept growing organically after that. And I mean, since we really got started in multifamily around 2015, we've invested in over 9,000 apartment units, about 45 different deals, almost all multifamily. We've done some industrial and medical office investments as well, mostly as a limited partner, just because I'm not an expert in those asset classes.
Sure.
But it's been it's just been a journey and part of the process. And I love the industry because it is so team-based and partnership-based, and there's so many opportunities for win-win arrangements and everybody aligning interests and kind of moving that right direction. Because these are big projects, they're expensive, and it takes a team no matter what.
Hey man, we preach team big time over here. All the time folks ask us how we get started, whatnot. We said, listen, you got to have your teams, man. Basketball team, soccer team, football team, right? Everyone has a role. You have to know what your role, you got to identify, and you have to execute. But at the same time, you still want to be a team player, because this is not a one sport, a one person sport, right? This is a team sport. With investors that have invested in your deals, what do you believe have made your deals very attractive to come on board with you guys? You pitching any of those metrics I talked about? Is it IRR, cash on cash, equity multiple?
When we look at, presenting an opportunity to investors, or when we're looking at, opportunities for ourselves, trying to put a deal together, we want to understand not just all the data points, and we're very data driven, and the data is very important, but what is that broader story? What are those economic drivers, and what's the story for that market and that particular asset? And that can include some intangible things, but it's really the accumulation of all of those data points that are driving a certain narrative and story. And so when we're looking at a market or an asset, it's what place does that serve in that community, in that market, that is contributing or is being affected by all of those data points, and then confirming that narrative and that story. And then once we have a good idea and we're confident, we believe in that story, then communicating that story to potential investors. But outside of that, it's everything you said. It's job growth, population growth, area median income, the income growth itself, the household formation, and what's the school districts, the unit type. But in our terms of our return metrics, I think cash on cash, this is where it's different for different investors. But
Sure.
Cash on cash is very important. What kind of is a realistic amount of income the project can throw off, and then really what is our projected equity multiple at the end of the deal.
Right.
Are we getting a 2x after 5 years, or what does that look like? And then in terms of IRR, and really all of our return metrics, we steer away from just having kind of a static, this is going to be a 15% IRR and we're going to have 10% cash on cash. We like to look at a range and use sensitivity analysis to show, well, we don't know, we can't predict the market conditions in 5 or 10 years. So here's a range of outcomes in terms of, rent growth, NOI growth, and market cap rate. So we can have an entire matrix of return outcomes. And so we're not going to say it's a 15 IRR necessarily. We might say it's a 13 to 16, or
give a range.
Exactly. Sure. A range, which we find to be more useful, because frankly, all of the deals that have gone full cycle for us, we've far exceeded what we projected. And a lot of that is because if you have to pick one exit or one terminal cap rate, you want to be conservative, but we may choose a conservative cap rate that I know in my gut, well, we'll probably sell it for less than that. I mean, we're in the process of selling a project. It was built in the late 60s. We did a value add, about 240 units. We're getting ready to sell it for a sub 5 cap, a 4.9 cap, which is, there's a whole other conversation we could have about the state of the market. But, we're selling at a 4.9 cap, but we would never underwrite selling a deal that was built in the 60s for even a 5 cap or even a 6 cap. When we bought it, I think we underwrite selling it at closer to a 7 cap.
Sure.
So, you have to be conservative, but even though, in your gut, if you look at a long-term trend of interest rates and cap rates over a 20-year period, we could say, okay, well, it's going to be in a range, could be lower, could be the same, but if you have to pick one, you're going to be more conservative. So.
Got it. What formula, right? There's different. I love talking about formulas. What formula has worked well for Spencer and your team, your wife, over the years? And what are some of the obstacles or roadblocks that you've run into and saying, okay, you know what? This didn't work for whatever reason. This doesn't work.
Yeah. So, I think the first one is, really being, patient and consistent, because, these projects, they're not only are they long-term investments, but it can take a long time until you're really in a position where you can really do the exact things that you want to do. So having, a great deal of patience and just being persistent and, having a specific plan and setting out, what you're trying to achieve, your acquisition criteria. And it's not going to happen overnight. You're not going to be able to develop the relationships overnight or find the deals overnight. But if you keep working to it, eventually things will start to happen. And some of the challenges, something that we've dealt with and has ended up working out, relatively well, is just, it comes back to these partnerships and, building your team. And, as time goes on, different people's, the objectives change, criteria changes, or just the way what people want to do can change. And so it's always good to, re-examine those partnerships and to determine, are we still at the same place that we were when we started? Does it still make sense to, continue to working together? We've had a number of relationships where, we started with, groups that, we're small, and we were even smaller, and we've both grown. And
Right.
and so the relationship changes, but we still work with a lot of the folks that we started working with. But it can be a challenge to make sure that the value that is being exchanged both ways is still valuable to the other person, because those dynamics do change over time.
Absolutely. Absolutely. So, with that as a backdrop, what are some of your personal and professional career goals for 2021?
Professional goals, we're looking to acquire $100 million worth of assets in 2021. Whether around 4 assets is, what we're targeting. It could be less than that. It could be more.
Right.
Personally, I want to try to do some traveling. I
There you
didn't go
go.
anywhere last year.
Yeah.
The
You
year
and I both.
before.
Me too.
Yeah. 2019, I made a concerted effort to go to as many conferences and to do a
Mhm.
lot of networking. I love doing that, and also traveling with my family. And then in 2020, that stopped completely. Doing that was very beneficial, to personally and professionally. And so I'm looking forward to taking some personal trips with my family, but also kind of getting out there, some of these industry events that I haven't been able to go to for about a year.
What have you found most effective in finding those deals? I know this is very much a relationships type
Yeah.
business, so it may just start right there.
It's relationships, but and it's a chicken and the egg thing, but it's having a track record of doing deals in the past.
Mhm.
Having a track record of doing what you said you're going to do, closing on the projects, being relatively easy to work with. That makes you a group and someone that one is a known buyer, which is much more valuable than someone you have no idea if they can actually close, if they've got the money. We're a known entity, a known buyer, and we do what we said that we're going to do. And having that track record allows us to just get access to more opportunities. We see deals before they hit the market, so we get
Mhm.
opportunities to make preemptive offers that only get sent out to maybe just us or a small handful of groups.
Right.
And frankly, because we've built this track record, we try to put ourselves out there on social media and do a lot of networking. We have conversations, every single week of people calling us and say, I've got a deal in, market X and Y. And
Mhm.
would you guys either want to partner, or, I've got it off market. Would you be interested? And so a lot of the deal flow is just coming to us at that, because we've gotten the word out there.
Mhm.
But then also just our network of brokers and, property owners.
It's all about reputation, right? What can we do to help you and your firm kind of achieve its goals this year?
Yeah, well, no, I appreciate that. Everybody wants to hop on over to our website, graycapitalllc.com. We put out a weekly newsletter that I think is one of the best multifamily industry newsletters out there. It gets delivered to your inbox every Thursday morning at 8:30. We include all the latest research reports that all the brokers, data firms put out there. We put most recent interest rates, quotes for debt. graycapitalllc.com. There's a little button to sign up for the newsletter. Very proud of what our team puts together. And so I encourage anyone that's interested in investing in multifamily to go on and check it out.
Hey, listen,
Perfect.
Spencer, I can't thank you enough, man. This is absolutely great. Keep safe, keep hunting, and have a healthy and happy week. Take care.
Hey, really appreciate it, everybody. Thanks a lot.